Investment property, from recognition to fair value insights. Hello and welcome to Canda Mentor. Today we're diving deep into IND AS 40, investment property, a standard that may seem simple but often trips up candidates during interviews. By the end of this session, you'll clearly understand what qualifies as investment property, how to recognize and measure it, what to disclose, and how it differs from other standards such as IND AS 16, IND AS 2, and IND AS 36. Let's move step by step from the basic definition and recognition to fair value, disclosures, and practical interview insights. 1. Objective and scope. The purpose of IND AS 40 is to prescribe how to account for investment property, which means land or buildings held to earn rental income or for capital appreciation. In other words, property held for earning returns, not for running the business. This standard does not apply to property used for the company's own operations. That's covered under IND AS 16, property, plant, and equipment. Property held for sale in the ordinary course of business. That falls under IND AS 2, inventories. Interview tip. When explaining the scope, always give examples. Say, an office rented out to a third party qualifies as investment property, but the company's own head office building does not. This simple distinction helps the interviewer see that you understand the purpose-based classification. Actually, therefore, do not understand. 2. Definition of investment property. Investment property refers to land or buildings, or part of a building, that a company holds either to earn rental income or for capital appreciation. However, property is not considered investment property if it is used in production or the supply of goods or services, used for administrative purposes. Interview tip. If asked, can a property under construction be investment property? The answer is yes, if the intention is to earn rentals or benefit from value increase in the future. 3. Examples. What qualifies and what doesn't. To make it clearer, let's look at a few examples. Qualifying examples. A commercial building leased to another company. Land held for long-term appreciation in value. Non-qualifying examples. A factory where the company produces goods. That's covered under IND AS 16. Land acquired for quick resale. That's inventory under IND AS 2. Interview tip. The key to classification is purpose. Why is the property held? If it's to operate the business, it's PPE. If it's to earn rent or profit from value growth, it's investment property. End it. 4. Recognition criteria. You recognize investment property in the books only when 2 tests are satisfied. 1. Probable future economic benefits. It is likely to generate income or value appreciation. 2. Reliable measurement of cost. The purchase price and associated expenses can be measured accurately. This probable and measurable rule appears in many IND AS standards, making it a useful memory anchor. Interview tip. If you forget everything else, remember, investment property must be both useful and measurable. Dash and dash. 5. Initial recognition. Investment property is measured at cost. The cost includes the purchase price, directly attributable costs such as legal fees, registration, and stamp duty, less any trade discounts or rebates. Interview tip. You'll often be asked, should borrowing costs or interest be added to cost? Answer. Yes, but only if the property is under construction, following IND AS 23, borrowing costs. Once it's ready for use, you stop capitalizing interest. Something. 6. Subsequent measurement model. Under IND AS 40, the cost model is mandatory. India does not allow entities to use the fair value model for measurement, unlike IFRS. However, even though the cost model is used for accounting, the fair value of each investment property must still be disclosed in the notes to accounts. Interview tip. Mention that IFRS gives an option to use fair value model, but IND AS does not. This shows your global awareness. 7. Cost model. Post-recognition. After initial recognition, investment property is carried at cost less accumulated depreciation and impairment losses. The depreciation and impairment principles follow IND AS 16. This means you allocate the property's cost over its useful life and test for impairment whenever there's an indication that its value might have dropped. Interview tip: keep it short and clear. After recognition. Investment property follows IND AS 16's depreciation and impairment rules. Ending. Fair value disclosure. Even though you're using the cost model, IND AS 40 requires disclosure of fair value in the notes to the financial statements. If fair value cannot be reliably determined, the company must explain why. Interview tip: a common trap. Candidates sometimes say you can record fair value gains in the accounts. That's wrong. You only disclose fair value. You never record the gain or loss in the books. 9. Transfers to or from investment property. Transfers between categories are permitted only when the property's use changes. For example, if a building previously used by the company becomes rented out to others, transfer it from owner-occupied IND AS 16 to investment property. Measure it at fair value on the date of transfer. If inventory property held for sale starts being rented out, its fair value on that date becomes its new cost. Interview tip: reclassification is all about change in purpose. No change in use, no transfer allowed. 10. Disposal of investment property. When an investment property is sold or permanently withdrawn from use, it is derecognized, meaning removed from the books. Any difference between the net proceeds and the carrying amount is treated as a gain or loss in the profit and loss account. Interview tip: this is a favorite question. Always clarify that the gain or loss goes to P&L, not other comprehensive income, OCI. 11. Presentation in financial statements. Investment property appears as a separate line item on the balance sheet. In the cash flow statement, any purchase or sale of investment property is shown under investing activities, not operating activities. Interview tip: mention that this separate presentation helps users of financial statements understand the company's non-operating assets better. 12. Rental income and direct expenses. Rental income from investment property is recognized in the profit and loss account under other income. Direct expenses, such as maintenance, property taxes, and depreciation, are also shown in P&L as expenses. Interview tip: if asked whether depreciation is part of investment property expenses, say yes. It's included as part of the total cost of earning rental income. 13. Property partly used and partly rented. If a property is used partly for the company's own operations and partly rented out, then, if the portions can be sold or leased separately, you split them and classify each part separately. If they cannot be separated, classify the entire property based on dominant use. Example: a building with a rented ground floor and the upper floors used by the company's management. If separable, split it. If not, classify based on which use is more significant, rental or operational. 14. Measurement hierarchy for fair value. Fair value should be measured using the 3-level hierarchy defined under IND AS 113 fair value measurement. Level 1, quoted prices in active markets. Level 2, observable inputs, like comparable property prices. Level 3, unobservable inputs, such as internal estimates. While using an independent valuer is not mandatory, it is strongly recommended to ensure credibility and consistency. Interview tip: state that fair value must be supported by market evidence whenever available. 15. Property under construction or development. When a property is under construction for future use as investment property, it should be treated as investment property under construction. All related costs, purchase, labor, materials, and interest are capitalized until the property is ready for use. Interview tip. This is often confused with PPE, property, plant, and equipment. Always base classification on intended use, not current stage of construction. 16. Impairment considerations. Investment property is subject to impairment testing under IND AS 36. You perform an impairment test only when there are signs of impairment, such as a fall in market value, physical damage, a drop in rental demand. If the recoverable amount falls below the carrying amount, the difference is recognized as an impairment loss in the P&L. Interview tip. Remember, testing is not annual by default. It's only when indicators appear. 17. Difference between IND AS 16 and IND AS 40. Aspect. IND AS 16, PPE. IND AS 40, investment property. Per stop. Purpose. Used for business operations. Held for rental or capital appreciation. Measurement model. Cost or revaluation. Cost model only. Depreciation. Applied. Interview tip. In interviews, expect direct comparison questions like, how is investment property different from PPE? Keep your answer short and structured. Purpose, measurement, and depreciation. 18. Key disclosures. Required entities must disclose the method and assumptions used for determining fair value, the rental income earned and direct operating expenses incurred, any restrictions on sale or transfer of the property or remittance of income. Interview tip. Emphasize that IND AS 40 focuses on transparency and consistency, helping investors understand both income generation and valuation. All right. 19. Common mistakes and traps. Students and professionals often make a few recurring mistakes, confusing inventory property with investment property, forgetting to disclose fair value even when using the cost model, failing to split mixed-use properties correctly. Interview tip. Also, never say valuation model used. Under IND AS 40, you disclose fair value. You don't measure or record at it. End. 20. Real-world examples. REITs, real estate investment trusts, holding office complexes for lease. Retail malls rented to multiple tenants. A corporate head office rented to a subsidiary. In separate financial statements, it's investment property, but not in consolidated ones. Interview tip. Mention that classification may differ between standalone and group financial statements, depending on perspective. 21. Quick revision summary. Let's summarize everything in one view. Definition. Land or building held for rental income or capital appreciation. Measurement. Always at cost, but disclose fair value. Transfers. Allowed only when use changes. Depreciation and impairment. Follow INDS 16 and INDS 36. Gain or loss on disposal. Recorded in profit and loss. Final interview tip. Memorize this golden line. Cost model for accounting. Fair value for disclosure. That single sentence captures the essence of INDS 40. Closing IND AS 40 ensures consistency and transparency in how companies report their investment properties. Though the rules are straightforward, precision matters, especially in distinguishing between owner-occupied and investment properties. If you can confidently connect IND AS 40 with IND AS 16, IND AS 23, and IND AS 36, you'll stand out in both exams and interviews. Thank you for learning with Candy Mentor, where accounting becomes clear, logical, and career-ready.